Hey guys, my name is Tony and I am from the YouTube team of the Binomo trading platform. Today we will study one of the most well-known instruments ever, the horizontal or levels. I will tell you what it is, how to apply it on the chart and why levels are so common and effective among traders. Let's go! By the way, there are several trading forms on our platform, FTT and CFDs. We have already told you what CFDs are, but let's remind you. A contract for difference is a contract in which you can get efficiency due to the difference in price between open and closed trades. If you're interested in SFD trading, let us know in the comments and we will make a separate video. But today, at the request of our users, we will talk about trading on FTT, specifically trading with the horizontal levels. Well, simply put, horizontal levels are straight horizontal lines drawn through the price peaks on the chart. The price reacts to the levels. It can't overcome them the first time, but when it finally does, it does with a strong push. So, levels can really help in price forecasts. And now, how to build the levels on the chart. Analysts recommend building levels with larger timeframes and then move lower to the timeframe you plan to trade. This helps you understand the direction people are making trades and how the general trend is developing. Need to mention that the levels is not a line with just one point. It is a price range, so the support and resistance levels are often imaginary lines from which the price hits two or more times. There are three types of levels. The first one is the resistance level, from which the price reverses and does not allow it to grow. Build such level on the local maximum of the chart. The support level is the second one, that seems to support the price and not letting it go down. On the chart, put them onto the local minimums. And the third one, the last one, is the mirror level, that the price broke through earlier and now gives it a rebound. But from the other side, any resistance level becomes a support level, a mirror level, and vice versa. So, how to use the levels? When working with the levels, remember that the larger the chart under study, the higher the chance the price will not overcome it, but make a rebound. But after finally passing the level, the price is likely to make a very strong movement. Next, after the breakdown, many traders follow the price movement and the price loses its pace. So, people get wildly nervous and stop trading. It means that a pullback has started and the return to the previous support and resistance level is not far off. Another moment is when a new support zone is forming around a broken resistance level, or vice versa. When it happens, there is an excellent signal for trading in the direction of the primary trend. This information is for informational and advisory purpose only. Now let's turn to the typical mistakes of trading on the levels. Well, the main mistake is a total misunderstanding. Somehow beginners like to trade up at the resistance levels and down at the support one. But guys, you need to do exactly the opposite. Another thing is that beginners often cannot determine the level correctly. What can I say? Practice makes perfect. But if you have someone experienced by your side, don't be afraid to ask for help, or at least watch some video and read some articles on the topic. Also, inexperienced traders may face a false breakout when the price goes over the line by a few points and then returns. So, it's better to wait and see how the next few candles will behave to minimize risks. And now, tips. Let me share some advice on how to build and find strong support and resistance levels. Listen closely. First, the lines must be straight. Absolutely straight, not a degree to the right or to the left. Use horizontal tool on the platform to draw fast, easy and correct. Consider the higher time frames, 15 minutes, an hour, even a day to monitor trends. Then, pay attention only to the key levels. the ones that the price has already tried to break through a few times but couldn't. And finally, don't focus on the perfect drawing. Often the level can touch the edges of a dozen candles, except for one or two. Don't worry, it is okay. Oof, what a session it was! Let's sum everything up. Support and resistance levels are one of the most objective and universal analytical tools. They have been on the market for ages and still haven't lost their popularity. So, the strategy with the levels will always be relevant. One disadvantage here is that traders often have to decide on the situation if the level is reliable enough. Might not be that easy. That's it for today, and thank you for watching, guys. And in other videos on our channel, we will continue to share useful information for traders. Subscribe to our channel and click on the bell to learn more about trading and not miss any new material. If you're looking for a trading platform, try Binomo. Find out more about the bonuses and the benefits of Binomo by following the link in the description. We hope that you will apply this knowledge in practice very soon and wish you productive trading.